Hello guys, so I'm going to show you my swing trading strategy. So guys, I'm going to show you my swing trading strategy on a few pairs, including gold and Euro AUD, NAS USDT, oil. Yeah, now currently what you're looking at is, I'm going to start all this over. I'm going to remove all the drones and show you how I got to see this trade and how I got this trade. Now let me show you, this one is GBP JPY. Let me show you some before screenshots. This is GBP JPY. This is before the move that you just saw already happened, like smashing the TP, take profit. As you can see from this view, there was no drawdown. It was zero drawdown, you understand? These trades were taken on a lower time frame, but then we are still going to discuss that. For now, I want to show you this. And then there is we have also USD JPY. As you can see, USD JPY, this is the before screenshot, before the move. Let me show you where it is currently. USD JPY. No, JPY. USD JPY. My network is a bit slow today, so it might load a little bit. So guys, there you go. There the drones just kicking. As you can see, the trade is currently moving now. There's the target over there. So you understand? This is before, was before. This is before the trade while I took it. This is on the 4 hour, as you can see. But I took this trade based off the 1 hour or lower time frames, or 30 minutes, even 15 minutes. But then you see the screenshot is a 4 hour. So let me show you. As you can see, I entered before this 4 hour candle closed. As you can see where it is, this one is bullish. It closed bullish, but then here on the screenshot, it is still bearish because I entered on a lower time frame. A lower time frame, it had already closed. It must be 30 minutes or 15 minutes or something. So understand. And then this is currently how it's going. It's still shooting up. And then I also gave this signal to one of my friends, but then he said he does not trade currencies. So his loss, as you can see, what's happening, he could be running in, let me see, 4%. He could be running 4%. Unfortunately, he asked me for a signal and then he told me, I gave him this USD JPY and then he said he does not trade. He's trading synthetics indices. If you guys don't know about that, then please don't try and find out. It's not safe. That place is not safe. Those who know, they know. So let me show you gold. What gold did to me. Guys, I love gold, trading gold, né? But then gold can be let's see if I'm still on. Okay, it says still recording. I will still share on my screen. Okay. Yeah, still sharing my screen. So I suppose let's continue. So this is USD JPY. Now let me show you the screenshot of gold in case. You see, this is gold before. You understand? Now let me show you gold on the charts, what it did to me. What gold did to me. How it moved. I want you to look at something. Look at this. Right after my entry, guys, let me show you again where it is. This is gold, eh? And now here's what it did. Now the entry that I just showed you, it's actually, the entry was here. The stop loss was somewhere up in here. And look what gold did. It went up, took me out, and then went down. But then the fact is, that remains is that I was right about the move down. So I'm going to also show you how I got to see the move is going to go down. So this was a stop hunt. So this means I was not the only one who saw this buy trade, this sell trade on gold. So there's a lot of us who saw it and then we got stopped out, all of us. So those ones who put their stop losses on top of this area, I suppose they are safe. But then us who wanted to have a tight stop loss, we got knocked out. Another trade I'm going to show you guys is Euro AUD. Euro versus the Australian dollar. This is before. So I took the screenshot after the move had already happened, like, yeah, it already closed up there. So, but then here's how it ended. Let me see. I want to show you how this one concluded, how this ended. You on Euro AUD. I love, if you notice the pairs that I'm trading, they're like the most volatile pairs ever. Look at this. Yo, and the best thing about this is that after hitting my take profit, that's when it started retracing. It is still gonna continue going up, I think, but I'm gonna have to analyze again to see the markets and like start from the bigger time frame to see how this is actually going and why this is like this. As you can see, it smashed my TP. This is 11% trade, 11.35% trade. This is the beauty of swing trading, guys. You can, the strategy I'm going to teach you, you can also use it to day trade. So, but then comment that if you want me to teach you how to use this strategy in day trading. So right now, let's get to the trades. Like, I also trade USDT, guys. Understand USDT, and let me show you USDT. Unfortunately, on USDT, I didn't take a screenshot before taking the trade, you understand? So I'm going to show you what happened on USDT. This is USDT, you understand? But then there is no way of proving to you that, because I didn't take the screenshot after placing the trade, you understand? So this is USDT, you understand? Like, this is what happened, 6%. Swing trading, guys, you understand? Swing trading pays. I love swing trading. I'm not a day trader. I can day trade, but then I prefer to have time, to be busy with my stuff. So let's go and start with, where do we start with? Let's start with Euro AUD and just show you the strategy, guys. And then we can move on to other pairs. Now, I don't want the video to be too long, so I'm gonna just show you just one pair because they all use the same strategy, you understand? But then they don't use like entries, they don't move the same. So that is something you're gonna have to learn, you understand? Maybe I should show you Euro AUD but the Euro AUD is a little bit too simple. Let me show you GBP JPY. I want to show you on something that has more info. This one was just too easy, understand? So I don't want to approaching markets thinking everything is just as easy as I just show you I want something that's a little bit complicated like this one, like GBP JPY. So let me show you, wonder if I do full screen, it will still continue recording. Understand? I hope it continues. Okay, it's going to continue recording. So let me remove all these trade and then all these drawings, not trade. Let me remove all these drawings, remove drawings. Now let's start from the beginning. Where do we start? We start on the weekly time frame. From when we trade, when you're going to trade, when you're going to analyze our pairs. All of the pairs, I do this every day. It doesn't matter if I'm going to day trade or I'm going to swing trade. Each and every time I start analyzing, I'm going to have to reanalyze everything starting from the weekly time frame. It doesn't mean we're going to have weekly targets. By swing trading, I'm talking about taking trades that only last like maybe a minimum of 2 days. Sometimes when there are news events, the trade can just happen in in less than 24 hours, reaching your take profit. So understand. Now, first and most importantly is recognizing structure. What are we doing on the weekly? We recognize that right here we had what we call a double bottom. This is a double bottom, you understand? Breakout, maybe a retest of this neckline you see right here. almost. It didn't happen entirely, but almost. But you understand the structure, like, and then shoot up. So overall, what we are in right here is it shows that we are in a what? The market just keeps going up, lower high, going up, lower high, keep going up. So in conclusion, what we have here is a bullish structure. And here's a bigger W pattern, which is a W. After the W, break out of the neckline, break out, and then come back to retest that neckline, which is here, and then boom, and then we went up, which is here, and then it came down again, but then went up. So overall, we are bullish on this one. So on the weekly time frame, we are bullish. So you understand? We are bullish on this structure. So what we need is to plot our, no, we don't plot anything here. We just recognize that the weekly is bullish. So let's go to the daily time frame. On the daily time frame, that's what we are going to start analyzing. Understand? Like start putting our support and resistance, horizontal lines, which is that, and recognize our structure, our turning points, our possible turning points. And then another thing before we start analyzing again on the daily, we are going to look at where are we in the markets on the daily, you understand? So in the markets, we had a bullish run and then a little retracement. But then we need to know, is this a retracement or is this just a retest of a previous structure again? On these highs, you see it was retested, this one closed and then wicked down, but then it still came back up to show that the buyers are in control now. They are very, very, very powerful. So that's our structure here. We understand that the market came up, is trading above this horizontal line. So let's put our structure carefully. Here we have a structure that was broken and then retested and then somehow broken below it. So it's still recording, it's still recording. So let's go. Let's continue. So let me remove this in case you didn't see it. I don't know if you saw me put them. So I don't want you guys to miss anything. And then when you look at this structure, we had this pattern right here. You could call it a triple bottom or you could call it a head and inverted holding shoulders. It still works, you understand? So let's see something like this. No, this is not the inverted head and shoulders. If we put an inverted head and shoulders, you're forcing things and that's not what you want. This is a triple bottom, you understand? The first bottom, second one, third one. There you go, like this. It's not so visible, so let's make it a bit. It is perfect. So you see, that's a triple bottom, and then we have a neckline, which is where we put our horizontal line right here. The market went out, came back, didn't get a perfect retest. So according to me, right here, I would have taken buys, hoping it goes up, okay? And then got stopped out. But then we are not here right now. So now here's our another structure, the structure that it created, which is this one, which is after this movement right here. Maybe I could have taken buy somewhere in here, né? But then let's say I didn't, which I didn't. And let's come back to the current structure, which is right here, understand? Which is this one, right? Which is where I saw the markets, when I saw the markets. Let me just show you with this one. What is the replay? The market, I think it was, let's forget the replay. Let's just continue. Don't want the video to be too long. You get the idea. So the market was like somewhere in here, you understand? It was still in the process of retesting these markets. Right after retesting these markets, this was the current structure right here. And then moving from here, we had our target, which is where I could put it here, like at the high of this, at this high, understand? These highs. But then I don't prefer to go that high. I could also put it on that high, but then I'm not, see that thing just showed up now. All right, man, after this time. So there you go. Guys, it's just my network. It's just a bit slow, so you understand. So let me just remove it once and focus on what is currently happening. So guys, you can put your structure right, like your target. Now you have your current market trend line, which is this one, right? Not trend line, horizontal line. Understand? It was broken, it came in, it was retested. So our target, which could be here at this very high, which is here, and then it could also be up here. But what I prefer to do, which is a safe place to put it, is where I have most touches. I have a touch here, I have a touch here, I have a touch here, here, and there. So which is where I always put my targets. You understand? To avoid having price coming close to my targets and then start retracing for a long time. Understand? So I want the markets to like hit my target and then let's be satisfied with each other. And then right now, let's go to the 4 hour. Understand? We move to a lower time frame. So what I'm doing here is called top-down analysis, which we start from a higher time frame going down. So you understand? And then what we have here, as you can see, we have a very strong level, which is this level right here. You understand? Which is this level. Now, you might ask me, when I saw this markets, you saw the screenshot, I saw this. This was an M pattern right here. Now, why didn't I look for sales? Because this is an M pattern. Now, listen, the market maker, you understand, the people who are controlling the markets, they know what you're looking at. They know what they want you to see. So just because I saw an M pattern, I'm not going to take sales just because of that. No. What I was doing here is, let's say I took a trade in here, like on the first retest. That's a breakout in retest. Maybe somewhere in here, but let's assume I took this first one right here. I took the buy in here, and then I went, my stop loss, I'm going to put it below these levels, you understand? And then my target is going to be exactly up there, you understand? It's going to be exactly up there, you understand? Like that. So now you might be wondering, of course it worked out. It went up, it came down, and then went up to my target. But that's not how I trade. When the market starts moving up and I see approaching this kind of level, I move my stop loss maybe somewhere up in here. You understand? I would have gotten out of this trade in a, I'm pretty sure it was a 2%. I don't know why this is like this right now. Probably because my entry was a bit lower like this, somewhere in here. You understand? Which is the first trade before the one I showed you. And then I got taken out at the 2%, understand? But just because I got taken out, I didn't get discouraged, you understand? Because I knew this could be a reversal. But then because the overall structure said what? Bullish. So I'm going to continue looking for bullish trades until this structure is broken and retested. Is broken like this and then retested. And then from here, I'm going to take my sell trades to a target somewhere, maybe below on this level right here. You understand? But then until that happens, I am still bullish. So what came back here, I think this trend line, this horizontal line was somewhere low like this. It wasn't exactly over there. It wasn't exactly here, as I recall. Yeah, it was on this level right here. Now, this is just something more advanced. Like right now, I can teach you this kind of secrets. So if you stick to the channel, if you subscribe, if you like the video, I'll be encouraged to teach you how I saw that this was the valid level and why not that one over there, né? Or this level right here. Why this was the actual level I took my trades. And then we go to the 2 hour to see if there's anything we can find. Mind you, the market is still here, right? On this level right here. So when we go to the 2 hour, we're going to look if there is something that we might have missed. And still, no, we still see the same thing. Now let's go to the 1 hour and see if the 1 hour is giving us a perfect rejection or what. So you understand? The 1 hour is going to tell us something. You understand? And then on the 1 hour, we come here, we find what? This. What do we call this? This is the hanging man. This thing, if you know candlestick patterns. If I should teach this, subscribe, like, and I will share that kind of information. This is called the hanging man. To understand. So it's also a signal that it's a sign of reversal. So as soon as I saw this, I decided, like, you know what? Why not? Understand? Life is all about risking. Trading is also all about risking. Alright? And then when you look at this, let's go to the 4 hour. Let's get the 4 hour. And then this one, let's go to, we're going to look for our stop loss, our previous structure, which is actually right here. And then we're gonna stop here. That's our stop loss. Let me pause this. Let me pause this. Okay. Now, while we were on the 4 hour, we came to look for our stop loss, which is below this level right here. These are the type of secrets I can share with you on this channel for free. I'm not going to charge you for anything. Trading should be free, guys. Let's go to the 2-hour time frame. The 2-hour time frame, and then I don't know why we are going to a 2-hour time frame. Because what we are going to do, we could have done on the 4-hour, which is targeting this area right here. Look at that on a 5%. Was it the 5%? Can't get the exact number. You understand? The entry was over here. Yeah, I took this screenshot on the 2-hour. I like monitoring trades on the 2-hour most of the time. It just depends on what kind of structure do we have, you understand? And then the entry was right here. Let me see where this entry was exactly. It was exactly when this candlestick was beginning, you understand? And then just like this, we got a 5% trade by just analyzing it. Now, I can't just give you what happened previously. I want to show you how I'm going to approach the new market. You understand? When I'm going to approach the new market, I'm going to remove everything, which is something that I do after each and every trade. Of course, I can use this. It's not like I can use this, still this very same information. But then what I could do is on the new structure, I could still have this level and wait for the market to like come back and retest it and say, let's take a buy and go up. But then that is not me. That is not who I'm going to see. I know that after this structure, I'm going to see a very new structure. I might end up seeing something like moving this horizontal line to this level right here. After this level right here, I could be waiting for a retest. It all depending on the daily time frame, what the structure is looking like. And then I'm going to take my buys from this area like this, and then stop loss somewhere like this. And then I'm gonna, you understand? I'm gonna have a target somewhere. I'm gonna have a target. I'm gonna have a target. It might be a 5%, 6%, 10%, or even 11%. Sometimes I can even have a 14% trade. But then I'm gonna have to like, I'm gonna trade because most likely when the target is like 14% or even higher, I'm gonna trail my stop losses because anything can happen. You understand? The market has to breathe. It can't just keep going up. Even on a beautiful structure, you see, this was a beautiful bullish movement and impulse. But then it came here. It had to breathe. You understand? This might have been a day. Let me see, from Monday until Tuesday, for like two days, this thing was breathing, and then on Wednesday it started continuing up, and then from here again, let's say it's from Wednesday until Thursday, for like a whole day, this thing didn't move. It was consolidating. The market has to breathe and even give us like opportunities to maybe re-enter the markets, enter the markets again or something. So we go up, we breathe up, maybe breathe for a few hours and then go up. So you understand? it's also giving opportunities to like create structure for us to be able to enter. The market don't just shoot up, because that's how most people have expectations. Like you come here, you see a screenshot like this, you think this thing just happened after 30 minutes. Just because I showed it to you under a few minutes how it happened, it doesn't mean when you're going to trade, it's going to happen under a few minutes. You enter the trade, you go away, you have you enjoy your day, enjoy your week maybe, while you're waiting for this trade to hit. That's a 5%. And then you also have other trades and stuff, and then you will, you understand, just enjoy trading and enjoy your life as well. The whole point of trading is to make money and also enjoy having a free time, a lot of time on your hands. And then let's show you US oil, what it also did, which is something I forgot to show you. It did something similar to gold. So you understand. I would like to share this type of trading with you guys and show you how to trade these things, like, and also learn like how could you avoid something like this in the near future. Now let's see if this is going to happen. The network again, it's still doing its thing. So whatever. So guys, you guys just go and follow my Instagram. My Instagram is real braving. Now I know by just telling you, you can just go and do this. No, this is oil. I'll show you what I could have done. My Instagram is, yeah, look at that. Now my Instagram is real underscore Raven. You can shoot me some questions down there. You can drop me some questions. I will answer you. This is my Instagram handle right here. So look at gold, what it did to, not gold, US oil. As you guys can see, I chose pairs that are like the most volatile. You understand? But then I still saw you. Gold, I still saw you. So you understand? This is my trade when I analyzed it. And then when I analyzed it, it came up, it just came up. I entered based off the 1 hour. It just looks like I entered in the middle of nowhere with a confirmation here. I entered based off the 1 hour. You see, there's a rejection over here. There's a rejection over here, a rejection candle, as you can see. Like I said, the hanging man. This one is not called the hanging man. This candlestick right here, it's not called the hanging man. The hanging man is the one I showed you before, which is at the bottom. Now this one is what's it called? No, this is the hanging. I don't know. There is the hanging man. There is a hammer. I don't know which one is which, but then all I know is that this signals a rejection and a possible bearish structure. What I could have done, which is what I normally do usually, I could have put my stop loss right up on this close right here. I would have been safe, understand? But then for some reason, I decided to put my stop loss right here, understand? Because I saw this structure right here, put it up here. I knew that this was not the place to put. Do you know why? Because 4% was looking better than 2%. This is something we call greed. You understand? I'm paying for it. This is called greed. You understand? This is what greed looks like. Because you didn't want to take 2%, you wanted 4%. Look, now you ended up losing. You understand? And then what I could have done after this trade, you understand, I could have fixed it. After taking my stop loss, I don't be like, you know what, I should have put my stop loss there. Let me enter again. No, you don't do that. You just let the trade run. So to confirm that, are we really still in a bullish movement, in a bearish movement? Which was, how did you confirm this? By not taking trades up in here. I knew it was going to go down probably, but then I didn't take any trades, which I waited for the market. Let me see. Now, what I love about US oil the most is that it respects. Now, I only use this Fibonacci. As you can notice, it only has 0.5 only. It is because I only use it on oil, because oil likes to retrace in the middle of on an impulse, which is the 50%, which is right here. Hence why you see this one right here, a perfect rejection. What I could have done was come up in here. It is part of my strategy. I use this. Like come up in here. This is a strategy. This is a strategy. It got broken. It got broken below again and then retested. And aligns with this thing. Besides, those of you who know channels, this was a channel. Understand? Hey, the local tavern is now playing music. I don't know if it's you guys can hear the music, but we are about to finish now. You see, this is a structure. I could have entered the trade right here on this hanging man. You see, here's another hanging man. You understand? We could have taken a trade here. Now, stop loss will have to be on top of this week right here. On a lower time frame, this is a structure right here. You understand? Which respectfully, I am supposed to put it on top of this one this week because this one signals, you understand, this is a safer place to put it. And then my take profit will still be the same, which is here. I would have called it 3.4%. Understand? Now, right now, what I could do, this is not some advice that you should take this, you understand? Our current structure, which is right here, I'm going to show you how this. I'm going to put my stop. No, let me show you something, my 50% retracement theory. Here's another one. Look over here. So you understand? It may have went past it, but then it's still the next candle closed below it. You understand? On a lower time frame, maybe the 15 minutes, let's go to the 15 minutes and just show you what really happened. You understand? We could have entered on this, and this is what some people call, this is a supply area right here. You understand? Those of you who know, this is a supply area, maybe in here. The supply area could begin in here, but me personally, I like to put it on these top weeks, which is this one, like this. What you could have done is saw this. This wasn't the proper rejection, understand? You could have waited for a bearish candle, which is this one. After this bearish candle, we could have taken a trade, and then where do we put our stop loss? You see right here, we have a little candle right here, but don't put it there. We put it on top of this structure right here, and then take our profit right here, which is a 2%. That's good. Maybe if you are a day trader, you understand. This is part of that day trading strategy I was telling you about. But then let's go back to the 1 hour, which is something that I'm more interested in. You understand? Which is the current markets on US oil. Now, here's a structure. This is not our low now. You understand? You understand? This is not our low because it was broken by this little movement here. So we're gonna go lower like this. So you understand? Entering this sell right here is not so bad, which is here on the close of this candle. This is a rejection. Now here you notice we don't have traction and we can't put our stop loss up there. We can put it on top of this candle right here, like this, a little bit just like that. What I would advise you to do is, we could have entered this trade right here, but then we didn't enter that trade. And then as you can see, our previous touch on this one is right here. So we could wait for this to like come up in here. It might create a week, maybe somewhere in here and then close. We're going to wait for some kind of rejection. Let's say the rejection is going to close somewhere here. Our stop loss is going to be on top of that rejection candle. Or if on top of that rejection candle and give it a few pips up, which I estimate to be something like this. And then we're going to have our take profit, obviously, here. Now, this is not a signal. You see, that's a 5%. Now, what I love about US oil, even though I'm a swing trader, I use bigger time frames, but US oil is very, 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 very volatile. You understand? It's very volatile. This trade can just happen in one day. Like today is Friday. It can just shoot down and then close right there. Or what we could witness, as you can see, we can see that this could be a potential triple bottom. So what we could witness is the market moving up and then retesting this level and then shooting up. You understand? Just like that. And then I'm going to have a trade that is going to tell me that, hey, we could be going up, could be bullish now. Plus, you know what's happening in the US, the fundamentals and stuff. Fundamentals, again, I could also teach you fundamentals. This could be our entry, and that could be our target. Just like that, that's a 5% trade. Understand? Which I recommend the stop loss to go a little bit lower like this. So what you need to do is analyze your markets. What I'm going to do for the next trade here, I'm going to reanalyze everything because I'm not going to use these ones I used for the previous trade, you understand? I'm going to remove everything and reanalyze everything. But based off the current information I have right now, these are the possibilities. This is the possible buy, and that was the possible sell I showed you, you understand? And one thing I love about US oil is that it's very straightforward. It does not create false movements or lie too much. You know, there are sometimes when you will take losses, but then the losses on these US oil trades are not really that big. And I really love trading US oil. Let me show you one of the trades I took. Now the screenshot was, hey, I'm making this video long now. This is US oil, US oil. Where's that trade? This is the one. I could have showed you what I could have done. This is the before screenshot. It's just opening. And then we're gonna have, why is it not showing? You see, this is the strategy. Now look at the target, what the target could be. This is a 1 to 20%. Understand? 2 hour. This thing took like 2 days to move. A 1 to 20%. I think it's a 1 to 20 or 1 to 21. Somewhere there. I don't remember. Now the after screenshot, where is it? It should be somewhere here, is it? You understand? That's the beauty of oil, why I love it. Here's oil after the after trade. Now, as you can see, the colors are not the same. It's because I ended up changing the colors of them. But you can see that it's the same thing. I ended up changing the colors of my trading view. I made it white. Before it was dark, I made it white. Now here's the movement and change the lines from white to black. Now here's the movement. It just dropped right there, just dropped and went down to this level. You notice that the market is no longer here. It actually kept going down. Currently, let me show you on the 2 hour on the current markets, because the screenshot, the movement was not yet complete. You see the gap, here's the gap. Because I knew the market had to go somewhere and retest somewhere and come back to close this gap. That's why my target was somewhere in here. As you can see, the analysis is no longer the same. It's because I analyze every time, understand? And now, here we are. I analyzed after when I was trying to take that trader here that took me out before going down, you understand? Because I took that that target was somewhere here in the 76 point something. What 76 point what? Let me see. Maybe it's shown here. It is 76.21. So the take profit was 76.21, maybe lower. It's lower somewhere here, as you can see. But then I ended up closing my trades here because it was Friday. You understand? Right here, somewhere here. I closed my trades because it was Friday. I had to close my trades. I didn't want to hold throughout the weekend for a movement like this because I knew after then I'm going to have spikes. You understand stuff. I wanted to start the new week freshly because it was just a few pips away. This was the previous target. But then after the movement, I did one. I ended up having a new structure, which is what I have right here. Even though this looks like a perfect rejection and I could enter a sell and then go down, it actually hit and then went down. But here's one thing I know about the market. The market can be tricky, understand? As you can see right here, this could be a previous structure. Let me show you. Like this could be a previous structure. You see? Resistance, support, it could still be a support and it's trying to go up. So I'm going to need to reanalyze everything from a bigger time frame and see what does the bigger time frame say. and also a little bit of fundamentals just to see. But I know on the fundamentals, we are going to be bullish because you know what's happening in the USA right now. Now, that's my Instagram handle. Please, guys, hit me up and like and subscribe. You understand? If you want me to share more, and just comment and tell me if I should share the day trading, if I should share more information. If you have questions, personal